Most businesses and financial teams in 2026 don't struggle with a lack of financial data. They struggle with interpretation. You've got spreadsheets, invoices, bank statements, payroll exports, SaaS subscriptions, and dashboards that all technically contain the answers, but they're scattered, inconsistent, and time-consuming to reconcile. In 2026, tools like Claude are not replacing accountants or CFOs. What they're doing is acting as fast, context-aware financial analysts that can sit on top of your existing data and help you understand what's happening, why it's happening, and what to look at next. This video is about exactly how to use Claude for that purpose, using real workflows that business owners, operators, and finance teams can apply immediately. Welcome to Plivo. Before you use Claude for your finance workflows, you need to give it the right context. This is where most people go wrong. Instead of pasting one spreadsheet at a time and asking vague questions, the correct approach is to first build a single source of financial truth. That usually means exporting your profit and loss statements, balance sheets, cash flow statements, and major expense breakdowns for tools like QuickBooks, Xero, or NetSuite. If you're an e-commerce business, this also includes Shopify payouts, Amazon settlement reports, and payment processing summaries from Stripe or PayPal. All of these documents should be uploaded together so Claude can reason across them, not in isolation. Once this data is in place, Claude can start spotting relationships that aren't obvious when you're jumping around between tabs manually. Next, you need to learn how to use Claude to diagnose cash flow issues or constraints. Cash flow is one of the most common pain points for growing businesses, especially those that look profitable on paper but still feel constantly tight on cash. With Claude, the goal isn't to ask, is my cash flow bad? The goal is to ask where timing mismatches are happening. For example, you can upload your cash flow statement alongside accounts receivable and accounts payable reports, then ask Claude to identify periods where outgoing payments consistently precede incoming revenue. Claude is particularly good at tracing these patterns across months and highlighting operational causes like inventory purchases or ad spend spikes or delayed customer payments. This helps you move from reactive decisions to planning adjustments, such as renegotiating payment terms or smoothing out spending cycles. You can use this prompt. Analyze the attached cash flow statement and AR/AP reports. Identify recurring periods where cash outflows exceed inflows and explain the operational cause behind them. After you're done with the above, let's look at expense analysis. Expense creep rarely happens in dramatic ways. It happens quietly, one subscription, one purchase at a time. Claude excels at reviewing detailed expense reports and grouping them into meaningful categories without you needing to pre-label everything. When you upload a full year of expense data, Claude can identify categories that have been growing disproportionately relative to revenue. More importantly, it can explain whether those increases are seasonal, one-off, or structurally embedded into the business. This is especially useful for SaaS-heavy companies where dozens of tools accumulate over time. Instead of manually scanning rows, you can ask Claude to surface anomalies and trends worth investigating farther. Here's a prompt example. Review this expense data set from the past 12 months. Identify expense categories that increase faster than revenue and explain possible reasons. If you like this video so far, consider dropping a comment below. So, how do you budget and forecast expenses? Claude simplifies that by allowing you to create scenario-based forecasts using historical data as the baseline. You can ask Claude to project future cash flow under different assumptions, such as increased ad spend, new hires, or pricing changes. While these forecasts are not a replacement for formal financial models, they are extremely useful for directional planning and decision making. The key is that Claude explains its assumptions in plain language, making it easier to sanity check outcomes. You can use this example prompt as a reference. Based on the past 18 months of financial data, project cash flow for the next 2 quarters, assuming a 15% increase in marketing spend and 1 additional hire. Finally, let's round this off by using Claude as a continuous financial review assistant. In 2026, mastering your business's finances doesn't mean replacing humans with AI. It means using tools like Claude to remove friction from analyst workflows, interpretation, and communication. When used correctly, Claude helps businesses move faster, ask better questions, and make better decisions with more context. The advantage isn't having more data, it's understanding the data you have without drowning in it. That's how you can use Claude to master your business's finances in 2026. If you like this video, do subscribe for more AI content, and we'll catch you on the next one.